Hey everybody, Chuck Barone here. November the 7th, Monday in the year of 2022. A new week of madness, a big week this week, lots of important data coming up. As always, we just want to thank you guys for your support for the show, watching the videos, and everything you do to make the show a success every day. We really appreciate your guys' support. Markets today. Well, today's kind of a weird day. We had a really up and down week last week. The Fed, of course, raising their rates, still trying to digest all the information that came out. I think that there's a little bit of a consensus starting to develop now that the Fed is going to ease up a little bit. I personally don't buy that, but we'll see how it goes. Anyway, today in the market, stocks up today. Markets rallying at the end of the day to finish a nice gain across the board. Stocks up. I think that, nothing goes straight down or straight up. I think that, stocks, we've had some decent earnings coming out from a lot of companies. So I think stocks really have no reason to have a giant collapse yet. We'll see what happens, though, because there's lots of new news and lots of new data that's going to lead us in directions who the heck knows, up and down and sideways and inside and out. The bond market today, prices down, rates up again. The 10-year sitting at 4.21%, up a little over 5 basis points today. We think that the days of seeing the 10-year under 4% are over. The 2-year jumping 7 basis points today to 4.72%. Rates looking higher. I think this is going to be the new normal now for interest rates for quite a while going forward. If any of you guys kind of took a look at what I was saying, Google the prime lending rate from 1970 to the present, and you can see how long these cycles typically last. It's typically not a month-to-month thing. It's a 20-year cycle, sometimes 30-year cycle. So I think we're moving into more expensive money and higher rates. It's going to be here for a while, guys. The dollar today down on the index, 110.10 on the index. Still a champ. It's just gyrating around with rumor. Traders do what they do. They need that action up and down to make money trading. So the dollar down, but not really on any kind of news. It's kind of still the strongest of all the currencies around. Metals today, you would think with the dollar down, metals would be up. Not so. Gold sitting at about $16.75 per ounce, down around $6.50 today. Silver at $20.90, roughly down about a nickel. So price is not really moving very dramatically in metals. I would have liked to have seen an update today with the dollar being down. Oil down today. West Texas Intermediate sitting at $91.92 per barrel, down about 0.75%. Natural gas, of course, gyrating all over the place as usual. $6.93 for their million BTU, up about 8% today. That market, just crazy to me. Texas, it looks like West Texas Intermediate had been in a trading range here from 80 to 85. Looks like it's broken out of that now, and higher prices coming in oil. Bitcoin today down, not dramatically, but about $345 to $350, sitting at about $20,850 right now. I think Bitcoin's holding its own. I like the support. I'd like to see it hold at above 20,000 for a little bit here. It's interesting to see the market up today with Bitcoin being down. That's 2 days in a row we've had Bitcoin going the opposite way of the market. Interesting, because it had been following the market pretty closely. Every Monday we tell you guys the big data coming out this week. Lots of stuff coming this week, important stuff. Today the Consumer Credit Report came out, and it shows that credit spending is slowing down. Still going up, but slowing down to $25 billion this past month from $30 billion the prior month. They were expecting $32 billion, so quite a dramatic fall down, but borrowers still borrowing. The interesting thing about the report was credit card spending really falling off a cliff. It was up about 18% last month. This month report showing it at about 8%, so more than half. So consumers putting the credit cards away a little bit. Good to see that. Hopefully some of them are the people watching this show. So consumer credit borrowers still borrowing. Tomorrow, not a lot of big government data, but we'll have a lot of important earnings coming tomorrow. Earnings are going to set the tone. We need we need these companies to continue doing okay earnings-wise, but we'll see how that works. Wednesday, mortgage bankers index. That's going to probably be pretty negative. We'll get wholesale inventory showing. Our wholesalers building inventory or selling it off. We'll get lots of earnings on Wednesday. On Thursday is the big day. Thursday we'll get the CPI report coming in for last month. They're expecting the CPI to be significantly higher, obviously. That same day, we'll get initial jobless claims. So we'll see where that jobless market goes. I think those two numbers are going to be big indicators of how strong the Fed's going to be in December. I think we pretty much can already factor in another half a point. The question is going to be, will they go a little higher or a little lower? I think it's all dependent on this data. So Thursday's stuff's going to be interesting. Also, we'll get the Treasury budget on Thursday, showing the amount of money the Treasury is going to have to be borrowing. It's a really sad thing because with these higher rates, a larger portion of the budget for the government, not that they have one, but bigger portion of what they spend is going to be spent on debt service. On Friday, we'll get consumer sentiment. It's a light day. The bond market is closed on Friday for Veterans Day, but the stock market will be open. It's going to be interesting to see how consumers are feeling. They've actually been saying consumers are feeling better. I don't know if the numbers we're going to see this week will allow that to stay the way it is. Today's news. Well, we need to talk about a couple of things. First, home equity for people owning homes here in the U.S., down a total of $1.5 trillion so far. That's averaging about $30,000 per every house in America. House values coming down as we kind of thought they would. CPI, this Thursday report on CPI is expected to come in at a plus 7.9%. So that is not a happy number. That is not going to make the Fed feel good. People will point to that and say, well, it's down from last month's 8.2% number. Okay, that's great, but it's still unbearably high. Core inflation expected to be up 6.5%, down from 6.6% last month. I don't think these are going to be inflation numbers the Federal Reserve is going to be happy with. Jobless claims are expected to rise a little bit. Actually going to come in at 219,000 they're expecting, up from 217,000 in the most recent report. So we'll see. Those numbers are going to mean a lot, guys. That's an important day. Interesting to go along with that, I was looking at the Atlanta Fed tracker today. That tracks the GDP growth that they're expecting for this quarter. Right now it's showing a positive 3.6% for the fourth quarter. It's still pretty early, so we'll see how it finishes, but it's just going to be interesting with two negative quarters, very, very small negative quarters, followed up by two positive quarters. There's going to be some debate of, is this a recession or not, I think. Fascinating stuff going on right now. Interesting today, too. I was reading an article. I guess our friends on Wall Street are crying the blues a little bit here. Their M&A activity is down 43% in recent months. Nobody wanting to buy companies. The cost of borrowing money to buy those companies has gone up pretty dramatically. I think that 43% number is just the start of things on M&A. Unless it's just going to be the bigs gobbling up the littles, which has been the trend, the ones that can afford to do it without massive amounts of borrowing. The playing field's going to get a little bit unlevel here. IPOs falling to their lowest rate in a decade. Who wants to put out an initial public offering of stock right now in this environment? It's just not going well. Companies are having to pay more money to service their debt and roll over existing debt. That's drying up the money that would be used for these mergers and acquisition business. Wall Street crying the blues. It makes me kind of feel sorry for our friends on Wall Street because, they're probably not going to get the $20 million bonus this year. It might be down to 18, 15, 10 million or whatever. So we know those guys are going to really have it rough at the end of the year. And to close today, tomorrow is election day. It's a very big day for the U.S., guys. Get out there and vote if you haven't done it early or by mail. Make sure I would advise, but everybody's going to do what they want. It's a great thing about our country. But please try to choose the best candidate. Don't be tied down to red team, blue team. There are some cases where the candidate for one party or the other is obviously an inferior candidate. Please don't vote for inferior candidates just because they're on one team or the other, guys. There's never been a time where we need better government than we do right now. Our government is completely dysfunctional. They're not doing anything. So this is your chance to do something about it and vote the bums out. Get rid of some of these guys. Our government is just a disaster, and we need, with all of the things going on right now, wars and geopolitical issues, this inflation, our economy, the plight of working people with the income inequality and wealth inequality just growing by leaps and bounds every friggin' minute. Voting is important, guys. Get out there and put your 2 cents in, man. I always say that if you don't vote, you don't get to complain about the government because you had your chance to have your say and didn't. So get out there and vote. It's important. It's going to set the tone for things. And I want to ask you guys, they're telling us, and it seems like the GOP, the conservatives, the Republican Party, will be taking control of the House. That looks like it's pretty much a done deal now. The big question is going to be the Senate. It's going to be a slugfest to the Senate down to the wire. But let me ask you this, guys. If the Republicans take over the House and or the Senate, both or one or the other, do you think it'll really help things? Do you think that they'll find a way to work with the other team and get something done for people? Do you think that the government will look into this economy, look into what's happening with working people, look into this inflation, and do more than just point fingers and create negative ads about each other? I certainly hope so, guys. I don't have much faith in government, and that is why I recommend the things for you that I do. Because I really don't believe the government's going to be here to help any of us. We're on our own, and it's important we take care of our own business. But it's also important we have our say once every 2 and 4 years about who's in this government, who's in office. This is your chance, guys. Get out there and vote. We'll be back tomorrow. A lot of news coming up. A lot of important stuff. These markets are going to be going wild this entire week. We'll keep you guys posted. We'll talk about elections. Until we talk then, guys, take care. Thanks.